Hello guys, welcome to the breakdown. So this is a breakdown on gold post FOMC. So as usual, we're going to look at a couple of things that led to this trade call. This basically has been a very smooth ride. So let's look at the ingredients of this trade. All right, that is what we are known for on the breakdown. All right, so this is a very simple trade. Let's start off. All right, so on the 4-hour time frame, spotted a demand zone, price rejected. So we saw a rejection. This was September, then price pushed higher, saw some aggressive right to the bullish direction. All right, so price then came back to that same area, October, same reaction as what we saw earlier. Now this is the third time price is coming back to that area. So of course the picture you saw earlier was basically as at the time the trade call was made, so which of course price did not dip into the zone yet. It was not even close to the zone yet. So with what has happened earlier, remember this channel is basically for you to understand how to look at the chart using basic supply and demand. So we expected that when price hits back the same demand zone, we are going to get a reaction, of course coming from yesterday's impulse drop from the FOMC. So I expected correction. All right, there's no other better place to get a correction aside from a demand zone. So this was the origin demand on the H4. All right, so let's go back to H1. So on the H1, of course, expected when price dip. So what do we have here? We have our first impulse. We had this area of consolidation, then we had a drop. So of course I think at the time of this signal, price was around 1623. So we expected a dip right into the zone. So of course, see our entry price was 1680 based on this wick right here to the left. The sell wick here is a trap candle, so that is why we reference that as our entry candle, 1618. And of course the reason for the stop loss, this is below the zone. So as of course we expect if price breaks below the zone, of course apparently we are wrong, and probably that is how far we can go in terms of risk. This trade was a simple one, so basically let's look at how many pips we were gonna risk. So we're gonna risk 48 pips, so apparently about 48.5 pips, going for 117 pips, over 1.2.1 risk to reward. So of course you can see price did drop to our entry, zooming in, drop just around the entry, then we started seeing reaction, price push higher. Now it was a buy limit trade, so of course you can have placed your buy limits, which guys did place, and they are massively enjoying. I've already colored the close option. We are currently left with about 8.1 pips to target to hit target. So of course you can see we are hitting target right now. We have hit the target, so that is an applause. So basically let's recap. All right, demand zone, expecting an impulse push or rejection based off what we had earlier, and that is what led to us calling this trade. So for the sniper gang, this is it. This is where we had the sniper entry. So right, first leg, then first candle, which is the bullish candle, we got our first entry, giving us 59 pips. This is for this rejection at this area, a little bit push, we got that 59 pips. then price drop, giving us this double bottom. So another entry still around the same entry point, and price did push. This time around, this is around the volume time. This is New York time, almost getting to when we are going to be experiencing London close. So volume came in and pushed price all the way to take profit. So now reason for take profit, if I put, you can see this wick right here is the reference point for the take profits. This, so basically we're expecting price, this is a breaking structure. We're expecting price to continue into the zone, reject off the zone, then retest the structure. So of course, as you already know, we do not go exactly pivot to avoid greed. We always isolate, looking at the closest reference point for exit, so which of course it was this candle and that area. So that is where we use as our exit point. As you can see right now, price has pushed higher up beyond the take profit. It's still going higher, so but we have already secured our 117 pips. So that is it. This is it on the breakdown. This is it on the breakdown. If you enjoy the content so far, please kindly like, share, and don't forget to subscribe to the channel. See you in the next breakdown video. Bye.